While Silicon Valley was captivated by the dawn of the internet and Wall Street was busy inflating the dot-com bubble, a quiet, unassuming chemist in a small Chinese workshop was dismantling a Sony battery. He had no venture capital backing, he had no glamorous pitch deck. What he had was a mandate, a microscopic budget, and the full, unspoken blessing of a rising geopolitical superpower. His name is Wang Chuanfu. Today, the media portrays him as the Chinese equivalent of Elon Musk. But this comparison is fundamentally flawed. Elon Musk is a private entrepreneur operating in a free market capitalist system. Wang Chuanfu is the executioner of a meticulously crafted, state-sponsored master plan designed to break the Western monopoly on global transportation. The company he founded is called BYD, officially standing for Build Your Dreams. But beneath the marketing slogan lies a highly weaponized geopolitical asset. This is not a story of organic business growth. This is the financial autopsy of the greatest industrial heist of the 21st century. A story of massive government subsidies, strategic espionage, and how the West blindly handed over the keys to its own economic future. Before we uncover how BYD infiltrated the American market, a brief note for the entrepreneurs watching. Surviving in this new economy requires ruthless financial organization. That is why we created the Sur Capital Portfolio Tracker, a premium dashboard to control your cash flow, investments, and business metrics in one place. The link is in the description. Now, back to 1995. In the late 1980s, the Chinese government realized a painful truth. Competing with Ford or Toyota on traditional combustion engines was a statistical impossibility. The patents were too locked down. So, the state quietly implemented the 863 program, a massive initiative to bypass gasoline entirely. They would patiently wait for the world to transition to batteries. And when that happened, China would already control the supply chain. BYD was their Trojan horse. By 2008, BYD was growing, but it needed something the Chinese Communist Party could not instantly manufacture: global credibility. Enter Charlie Munger, the legendary vice chairman of Berkshire Hathaway and Warren Buffett's right-hand man. Munger was scanning the Asian markets for the next industrial titan. When he met Wang Chuanfu, Munger famously described him as a combination of Thomas Edison and Jack Welch, a genius who could invent the technology and ruthlessly execute the business plan. Buffett and Munger took the bait. Berkshire Hathaway invested $232 million to acquire a 10% stake in BYD. The Western financial press celebrated it as a masterstroke of value investing. Wall Street thought they were buying a piece of a quirky, promising Chinese battery manufacturer. In reality, American institutional capital was being used to fund the very machine designed to obliterate Detroit, Michigan, and eventually, Tesla. The Trojan horse now had the stamp of approval from the most respected investor on Earth. With limitless state subsidies and newly acquired American prestige, BYD went on a quiet but aggressive offensive. They didn't just reverse engineer cars, they bought the architects who designed them. Over the next decade, BYD systematically poached elite designers and executives from Audi, Mercedes-Benz, and Ferrari. They were fusing 100 years of European luxury car DNA with a supply chain completely controlled by Beijing. While Western executives were still debating whether electric vehicles were a passing trend, the trap was sprung. The West failed to realize that building an EV is not about bending metal, it is about controlling the chemistry. BYD didn't just assemble cars, they bought the lithium mines in Africa and South America. They built the cargo ships to transport the minerals. They manufactured their own semiconductor chips. The vertical integration was absolute. In 2011, during an interview with Bloomberg, Elon Musk was asked about BYD as a competitor. He openly laughed. He dismissed their technology and their design, stating they were simply trying to avoid going bankrupt in China. Musk's laughter was the echoing arrogance of an entire Western industry that believed its supremacy was eternal. But the laughing has stopped. In 2020, BYD revealed its masterpiece, the Blade battery. While Western automakers were struggling with battery fires, supply chain bottlenecks, and highly expensive cobalt, BYD engineered a lithium iron phosphate pack that changed the rules of the game. It was significantly cheaper, structurally safer, and virtually immune to combustion upon violent impact. The industry was stunned. They had spent decades mocking Chinese manufacturing, only to realize the Chinese had quietly perfected the very technology that would replace the engine block. Armed with this superior technology and an unshakable supply chain, BYD initiated a ruthless, scorched earth price war. They introduced the BYD Seagull, a fully capable electric vehicle priced at roughly $10,000. Detroit and European automakers simply cannot manufacture a car at that price point without bleeding billions. But BYD can. Their profit margins are insulated by the ultimate financial shield, the deep pockets of the Chinese state apparatus. The panic quickly spread across the Atlantic. Germany, the historical, undisputed king of automotive engineering, suddenly found its ports flooded with massive transport ships unloading thousands of BYD vehicles. European CEOs, who once viewed Chinese cars as cheap knockoffs, were now holding emergency crisis meetings in Munich and Stuttgart. The Trojan horse was no longer hiding. It was marching triumphantly through the front gates of Europe. Desperate to protect their domestic industries from total annihilation, Washington and Brussels scrambled to build a tariff wall. The United States slapped a massive 100% tariff on Chinese electric vehicles. But Wang Chuanfu was already 3 steps ahead of Western politicians. To circumvent the barricades, BYD began aggressively building manufacturing plants in Hungary, Brazil, and directly on the American border in Mexico. The infiltration was unstoppable. In the final quarter of 2023, the unthinkable happened. The global numbers rolled in, and the crown was officially seized. BYD dethroned Tesla to become the world's top-selling electric vehicle manufacturer. Elon Musk's decade-long monopoly was shattered by the very company he had laughed at on national television. The student had not just surpassed the master, the student was preparing to buy the master's factory. But the invasion is not just about selling cheap hardware. It is about data. Modern electric vehicles are essentially supercomputers on wheels. They are equipped with dozens of high-resolution cameras, ultrasonic sensors, and microphones. Every time a BYD car drives down a street in London, Berlin, or eventually Los Angeles, it maps the environment with military precision. Western intelligence agencies are now asking a terrifying question. Who actually controls that data when the servers ultimately report back to Shenzhen? Washington's 100% tariff was supposed to be an impenetrable shield. But BYD is executing a classic geopolitical flanking maneuver. By investing heavily in manufacturing facilities in Mexico, BYD is positioning itself to exploit the USMCA free trade agreement. They are not trying to break the wall, they are simply walking through the back door. Once cars are manufactured on North American soil, distinguishing a Chinese vehicle from a Mexican one becomes a bureaucratic nightmare for US customs. The legacy automakers, Ford, General Motors, and Stellantis, are caught in a death spiral. They cannot produce electric vehicles at a profit without charging luxury prices. But the middle class is being suffocated by inflation and high interest rates. They cannot afford a $60,000 Ford Mustang Mach-E. BYD is offering them equivalent technology for less than half the price. The old guard is not just losing market share, they are facing an existential threat that could trigger the collapse of the American automotive industry as we know it. To focus solely on cars is to miss the true scale of Wang Chuanfu's ambition. BYD is not an automotive company. It is a green energy empire. They are manufacturing the solar panels that capture the energy. They are building the massive grid-scale battery farms that store the energy. And they are producing the vehicles that consume the energy. They have constructed a closed-loop monopoly on the future of human infrastructure. The rise of BYD exposes a fatal flaw in the Western economic philosophy. We believed that free markets and private enterprise would always triumph over state-controlled economies. We thought innovation could not be dictated by a government committee. But the Chinese Communist Party played a 30-year game of economic chess. They weaponized patience. They weaponized capital, and now they hold the world's most critical supply chain in an iron grip. The era of Western automotive supremacy is over. The invasion has already succeeded. The only question left is how much of the market BYD will allow the West to keep. If you found this corporate autopsy valuable, subscribe to Sir Capital. We decode the financial warfare happening behind closed doors. And remember to check the link in the description for the Sir Capital Portfolio Tracker. Until next time.